Hey Omar, how you doing today? Stop that, stop that. There we go. And we're live! Yay! Hey everyone, this is James from Dividend Stock Talk. Brought to you by the 10-Minute Trade, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for that safe, predictable, consistent 1% per week. So hopefully everybody's doing good. It is Tuesday. You know, don't get old because you have a tendency to forget things. Calibri back again. Grandpa John, Craig, David, how are you guys doing tonight? Hello, hello, hi. Oh, Calibri, Rocco, back again for some more wonderful punishment. I don't know. Probably the wrong set of words, but it is what it is. So, let's get us started. Where is my book? Here's my book. Got my book going over the stocks we left off from yesterday. I think we left about 20 stocks to take a look at from yesterday. Rocco, the screen is backwards. Well, no, it looks right to me. See, it goes from left to right, and there's all the numbers right there. It looks about right. All right, so what is going on? Alright, so let's get this party started. Jonathan, hello Dave, long time. You got to hit mirror on the app. It's backwards on TikTok. Yes, I know it's backwards on TikTok, but you want to know? Here's the thing. I understand that it's backwards on TikTok, but over here on Instagram, YouTube, and Facebook, it's all right. And this screen right here is live broadcast on YouTube. So if you want to be able to see these numbers here, you're never going to be able to see them on your phone or your what do you call it, iPad. You're not going to see these numbers. Your best bet is open up this screen right here live on YouTube. That way it makes it easier for you. If I turn it around, let me turn it around for a little bit, see how I get used to it. There you go. Still drives me nuts, but let's figure it out. Hey, Doc Botox is here. But see, take a look. It still goes left to right. And that's still the same to me. It's just the camera makes things go backwards. So, I got camera here, camera here, camera here, and the camera right there. So, we'll see how it goes. Mark! Thanks for following along there, Mr. Mark. Alright, Mr. Doc. How's it going this evening? Let's get in and let's get started right away by looking at the very first one on our list, Johnson & Johnson. Now, before I go any further, just want to let you know that there's a slight chance, slight possibility, you may get a text message or a DM or some kind of notification saying that it's me. Okay, no. There's 22, last I counted, 22 people pretending to be me. So if somebody calls you and asks you for money to invest in some cryptocurrency, a cool idea here, whatever, it ain't me. Okay, just to let you be leery of that fact that it just might happen to you. Okay, if you want to talk to me, seriously, send me your number and I will give you a call. Okay, it is that easy. If you really want to talk to me, send me a number, I'll give you a call. Okay, so why are we here? We're here for a safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. And those are companies that we all know and love. Okay? Now we take a look at them every day. 20 years of increased dividends, weekly options, and this way we can get a safe, predictable, consistent 1% per week. Okay, so let's get started. Now we left off last night with Johnson & Johnson. So let's take a look at Johnson & Johnson. Now, those you may not know, Johnson & Johnson's over 100 years old. They've increased their dividends for more than 50 consecutive years. That means every year, higher and higher dividends, more and more money. And that's basically what we're doing this for, right? Or either that, we're doing it, ooh, yeah. All right, here we go. See if I missed some of these questions. Sorry, guys. All right, Sphinx Cat. Yeah, I don't do cryptocurrency. What is that? Forex. I don't do Forex. Not here anyway. Looks good to me. Flight path, all right. Good. Okay, thanks. Papa's here. Mark is here. Hey, Randall Ray. The stock is going up now. Okay, Rocco, I don't know which one you're talking about. You might have to remind me. Yep, I can see AT&T now. TikTok. Yeah, well. Jeffrey's here. Macy's. Oh, we got Macy's on the list. Yep, Macy's is on the list. Going to take that in a little bit. Clorox was nice entry at 130s. Cool beans, Jonathan. Glad it worked out for you. Yeah, James, I sent you a bunch of money. Hope we do well. Alrighty, hope we do well. Am I late for class? Judah, we just got here, just getting started. Jonathan, oops, I missed Jonathan's question. Uh-oh, wow, all these questions. Alright. Apple broke 200 today, which was lovely, by the way, for the call options. There you go. I don't remember recommending that because I don't make recommendations. I just, But they made the jab. Yeah, I know. So, Rocco, we're talking about Johnson & Johnson. We're going to take a look at it in a little bit as soon as I go through all these questions first, because I don't want people to think I'm neglecting them or I don't value your thoughts. Thoughts on TSM puts with the China invasion news. Stefan, sorry, I don't do puts at all. I mean, they're great for what they're designed for, but I can't find my pen. Oh, here it is. They're great for what they're designed for, but for this particular trading strategy, I don't use puts at all. Okay, now this trading strategy was created for my 9-year-old daughter. It had to be simple. It had to be safe. It had to be predictable. Who knew it would have made as much money as it does? And the consistency, it's just crazy. So I have been doing it for the past, over 15 years. Safe, predictable, consistent, 1% per week. Okay, so being 9 years old was kind of helpful to help me figure it out. Okay, so it was created for her. Simple, safe, predictable, consistent, and no way to lose. Well, how do you get all 5 of those? Well, I came up with a set of rules, and I try not to deviate from them, because I want who I taught 10, 15 years ago to get the exact same information then as you do today. This is just a stepping stone for you guys. Okay, you guys take a look at what I'm telling you. See if it makes sense. If it makes sense, great, do it. If it works for you, if what you're doing now is better, fine. I got no problem with that. But it works for me. Okay, I look at quality companies that have consistently increased their dividends for more than 20 years. Why do I focus on dividend stocks? Well, I focus on dividend stocks mainly because I want to be reassured that I'm going to get higher and higher dividends every single year, regardless of what's happening in the economy. And we all know there's a lot of crap going on in the economy at the moment, right? So, in order to avoid that mess, I want to make sure my investments are safe, predictable, and consistent. Okay, I'm looking for 1% a week. It's not a lot of money that I'm looking for. So if everything is done right, it works easily. And it takes less than 10 minutes. Okay, so if you've seen any of my videos, you say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. The 10-Minute Trader was a strategy designed to spend less than 10 minutes in front of your computer. It's really not that difficult. It's very simple. Okay, very simple rules. Okay, 20 years of increased dividends, weekly options. Okay. Hakuna, question, go ahead. Let me keep going these. Sorry, yeah, I have to go back to the questions. Nastiva, how you doing, Nastiva? Simone, how are you? Back again, Jonathan. How you doing? There we go. I'm almost caught up. Para went down on news. Okay, Mikey G. We did look at Para this morning, and for some strange reason it was a no, but I don't know what the news was, because seriously, guys, I really don't pay that much attention to what's going on. When I say 10-minute trader, I mean literally 10 minutes. The news has a very small chance of create any kind of adverse effect to what we're doing. Okay, very seldomly does news have anything to do with it, because it's a simple trading strategy. We're looking at good quality stocks. We're buying them at the right time. Well, how do we know it's the right time? Well, the chart tells us. Well, what is the chart? The chart does nothing more than measure me and you, our buying habits. for the particular stock. This is Johnson & Johnson. Look, I take one look at, that's a 1 year chart, which means 52 weeks ago, exactly a year ago from today, that's where it starts. Where does it end? It ends today. That's a whole year. Today and then 52 weeks ago. Very first thing I want to see is I want to see where the high is of the year, and I want to see where the low is of the year. Okay, great. Now what I want to know is where was it exactly a year ago today, and where is it right now? Okay, once you get that figured out, then you take a look at the other things. All right, what do I mean? All right, what's it trending for the year? It was here, now it's here. Oh, simple. That's going down. Pretty simple, right? But that's only one part of the equation because I want to know where's it going to go next. Well, how can I tell? Well, let's take a look. From the 1 year chart, I like to jump to the 90 day. Now, why right to the 90 day? Well, because the 90 days is only 90 days ago, which is just 3 months ago. It's not that far away. 30 days is one thing. 60 days, yeah, but a little iffy. I like 90 days. Now, you guys can pick whatever you want. I like looking at the 1 year chart and then the 90 day chart. The first thing I want to look at the 90 day chart is where's the high, where's the low, where was it 3 months ago, and where is it now? What direction is it going? Well, look, it was here, now it's here. Okay, great. Now we know which direction it's going. We know where the high is, we know where the low is, and we know where it is as comparison to those 4 marks. You have 4 marks. The high, the low, where was it, where is it? It's real, and it takes less than 2 seconds to figure it out. High, low, where was it, where is it? Okay, so once I figure that out, now comes the important part. Where is it going to go? And how do I figure that out? For that, it's just basic logic. Okay, now what do I mean by basic logic? This is the last 30 days. Okay, 22 trading days. That's the last 30 days of trading. Okay, that's a month ago. This is today. You can see it without me even telling you. High, low, where was it, where is it? It's very simple. Look at it. It went up, made the 30-day high. Now remember, there can only be one 30-day high. Then there can only be one 30-day low. So what happens? She goes up, that's her high, then there's profit taking. The stock comes down. It gets to a point where you and I, the buyers and sellers, the investors, just say, wait a minute, Johnson & Johnson at 143? Hell yeah, I'm going to buy some. So we accumulation. And she was back up, and back down, and up, and then down, and then. So where's it going now? So here's the 30-day bottom. More than likely, it's going to go to the upside. But remember the overall trend for the year. See, the overall trend from the year, from here to here, it's not a huge drop, but it's still to the downside. In the last 90 days, again, to the downside. So 30 days, basically the same thing right there. Not huge, but there it is. Eventually, it's going to find the bottom for the year, and then she's going to go up. Why? Well, because at some point in time, we, the buyers and sellers, saying, hey, Johnson & Johnson's been in business for over 100 years. They ain't going anywhere. They're going to be here. They've seen a lot of crap. They've seen World War I, World War II, Korea, Vietnam, all that crap over in Desert Storm in Afghanistan, Iran, Iraq, all that crap. We've seen all that. Also, in the last 100 years, we've seen the Great Depression. Okay? We've seen Y2K. We've seen the stock market crash of 87. We've seen the, the economic crisis in 08. The pandemic in 2021. The, what do you call it, Y2K in 2000, and the dot-com bust. We've seen a lot of crap in the last 100 years. So why is it that there's a handful of companies that consistently increase their dividends every single year? Consistently. Okay, these companies are over 100 years old, and they're still consistently increasing their dividends. They've got to be doing something, right? They've got to be making a profit, because what is a dividend? A dividend is nothing more than the investors, our share of the company's profits. If the company's profitable, they pay out dividends. Now, there's 9,520 different companies in the stock market that I can invest in at any moment. But there's less than 300 that fit my criteria. What is that? 20 years of increased dividends, weekly options. That's just those two minor ones. Ooh, okay, I got a question. Ooh, I love questions. My thing stopped. Which software is that? Hey, double O, that's not software. Okay, that is the trading platform available on Thinkorswim, which was recently bought out by Charles Schwab. Okay, you can download it free to your computer, open up an account, Charles Schwab, do whatever you want, but I've been using this for over 15 years. Why? Because it was created by a professional trader. He said, this is what I want in a trading platform, and he created this masterpiece. I mean, it is cool. He sold off to Ameritrade. Ameritrade got bought out by Charles Schwab. So, that's where it is now. It's residing at Charles Schwab. Everything I need in there, I love it. Okay. So it's not really a software, it is a trading platform. So it's got some more questions. I'm not ignoring your questions, I'm just going over these. Thinkorswim, yep. Okay. Your resonance. Question Instagram. I had to divide into two parts. Will do. Let me go through these first. Alright, here we go. Alright. It looks very nice. Okay. DG looks good. Yeah, Gallant. I'll write DG on the list because it's not on there at the moment. DG. Just to let you know, DG is on my personal list. Had to step away. Poseidon's Last Molar. Cool. Had to step away. What was the outcome of where we will go from here? Well, we're still working on it. If you had $1,000 to put into a stock tomorrow, what would that be? Easton, I really can't tell you that. Why are you ignoring mines? Alright, Shop, I have no idea what you're talking about. But, that being said, I'm going to go with the question over here. Okay, so anyway, Easton, I can't answer that question for you only because I have no idea who you are. I have no idea what your trading strategies are. I have no idea what your risk parameters are. That's why I always, when people ask me a question, send me a phone number. I will give you a call. DG actually looks exciting. Looks excellent. Okay, we're going to take a look at it, Gallant. It's on the list. So I'm going to go over here to Instagram and answer this question. Cool beans. All right. Hey, James. I hope I have a follow-up from yesterday. When you sell a call, do you usually sell it at the money or 2 weeks before the dividend? Always 2 weeks before the dividend. More than likely. That's when I first take a look. Okay, I'll first take a look 2 weeks before the dividend because the stocks go up usually 2 weeks before the dividend. So if I jump in 2 weeks before the dividend, I buy it and I sell it for the exact same price. I collect that premium, okay, and then I'm usually out within 5 days, which is my main goal. It's really, this is really driving me nuts. Shop 305, it didn't show up. Try again. Wade, I have no idea what you're talking about. Didn't show up. Try again. I can't find anything either. Okay, I have no idea what you guys are talking about. Talking amongst yourselves. That's fine. Okay, next part of the question. With the hope that the dividend will take the option in the money. Is that correct? Instead of selling it in the money, is that your strategy? Okay, Hakuna, basically, yeah, his question didn't show up before the ex-dividend date. Okay, Simone, I only got half of that. Best risky penny stock right now. Yeah, Easton, I don't do that. Don't do penny stocks at all. If it doesn't have 20 years of increased dividends, which penny stocks don't, okay, I don't want to look at it. Seriously. Alright, so, as I was saying, first thing I want to do is find out when they're paying their dividend. Next thing I want to do is, what are they paying me? What do I mean by that? Well, I'm going to do mostly covered calls. Covered calls where you buy a stock, you sell an option against it to collect a premium. And that premium, for me and for my strategy, I like to do 1% or higher. Okay? This way, I make sure I have a consistent weekly cash flow. Now, if I'm looking at Johnson & Johnson, first thing I want to know is what can I buy it for tomorrow morning? That is where I look at the trade grid. The last traded price, the bid, the ask, the volume, the open, the high, the low. Okay, this is all the information about the stock itself. You can go to any financial website and you will find these exact numbers because there's only one high and there's only one low. Rocco, not if you can read financial statements. JFN is a large peer-to-peer lending service in China. Okay, but I'm looking at Johnson & Johnson, not JFN. Okay, $7 stock, $1 dividend. All right, Rocco, I have no idea which one we're talking about. Okay, now I like dividend stocks that have 20 years of increased dividends. Did you not answer my questions? Hold on. Sorry, James. We're having a side conversation. Okay, side conversation. Okay, so Hakuna. We answered this question before, but let me say it again. May not have done today, but when I buy and sell calls, okay, on a stock, I like to do a covered call, which means I buy the stock right here, and then I calculate which of these is going to give me the safest return and over 1%. Okay, what do I mean? Well, I want 1%. So, quick math. Okay, $146.88. 1% of that is $1.46. You just move the decimal point over two places. Okay, 146 bucks. $1.46 is 1%. That's all I'm looking to get. Okay, so if I buy it at 146.88, the closest strike price is going to be the 147. And the 147 is going for 82 cents. That's not 1%, so that's going to be a no. ALB looks good too. All right, Gallant, I'll write ALB down. It's already written down. Okay, Able Mall, it's already written down, Gallant. Okay, so to answer the question, it all comes down to the numbers. So what I am getting as a profit divided by what I'm paying for it, that gives me my rate of return for the week. Okay, I like to have 1% or more. If I can't get my 1% or more, okay, then I usually say no and go on to the next one. But if I get, 1, 2, 3, 4 of them being over 1%, I'd like to go further in the money. Now, what I mean by in the money is right now stock's at 146.88, which at the there's three you gotta remember: in the money, at the money, and out of the money. Okay, so if the stock price is currently at 146.88, at the money is going to be 147, because that's the closest strike price to the current stock price. Okay, the strike price is what you can buy it, what you can sell it for when doing a covered call. Because I got to buy the stock first. Okay, I buy 100 shares, and 100 shares equals one option contract. One option contract at the money is going for 82 cents a share. Not quite 1%. Okay, the 146 strike price is going for 139. Now, before you think that it's more money, it's not. Because if I'm buying it at 146.88 and I'm selling it at 146, I'm losing 88 cents right off the top, which means I got to subtract that 88 cents from the 139, and then it becomes less than this, and it just doesn't work. The numbers just don't work in this equation. Okay, now, don't get me wrong, I love Johnson & Johnson, and if I wanted to get 82 cents on 147, let's quickly do a little bit of calculation so we can actually give you a real number so it'll be easier for you to comprehend. Alright, so we know Johnson & Johnson's a dividend king, which means they've increased their dividends from more than 100 years. No, wait a minute, sorry. They've been in business for more than 100 years. They have increased their dividends to the shareholders for more than 50 years. That means they're a dividend king. Okay? So, if I buy it at 146.88, I sell somebody the rights to buy it from me at 147, which is 12 cents less, 12 cents more than what I'm paying for it. Okay, so I divide my profit by what it's costing me, and that gives me my rate of return. Alright, so 0.82 divided by the purchase price, 146.88. Give me a grand total of 0.5%. Oh, excuse me, 0.5% for the week. Gallant, we'll take a look at BNY. Colorado stock was in a downtrend in all 3 periods. Does that matter? Of course it matters. It gives us an idea of which direction it's going. Okay? So let me finish up with the mathematics first. Okay, so if I buy it 146.88, I sell someone the right to buy it from me at 147, I get 82 cents. 82 cents is a 0.5%. Okay, now 0.5% doesn't sound like anything, but you multiply that by 52 because there's 52 weeks in the year, that's still 29% for the year. I could go for 29% for the year. Reggie Joe Bo Jackson. Got that one wrong, didn't I? Reg, how you doing? Is DG? Yes, Reggie. Dollar General is on the list. All right. Now, that's how you figure out the mathematics of it. What am I buying it for? What am I selling it for? How much am I making? If I'm making enough that I'm happy with, I love Johnson & Johnson. You just really, think about it, you really just can't go wrong with them. Okay? It's been in business for over 100 years. All right? They consistently increase their dividends for more than 5 decades. That makes them a dividend king. Check your resident. Okay, hold on. Hakuna. I know what a covered call is. Just wondering if you buy in at the money or to hope that they. Okay, yeah. Hakuna, I answered that question already. It's all about the numbers. Okay, so if I get the highest return at the money, okay, that's one thing. If I get a lower return in the money, say this is at money, this is in the money, 146, 145, 144, 143, that's in the money. Out of the money is 147, 148, 149. So that means the stock has to go up to get one of these. The stock doesn't have to do anything to get one of those. It's just going to stay above a certain amount. Okay, so it all depends on what the numbers say. In this instance right here, at the money is only 29% per year. Okay, I can live with 29% per year. I prefer 50%, but it's 29, and it's Johnson & Johnson. If I did the mathematics for the 146, I'd be bringing in less because it just works out that way. You know, the numbers are what the numbers are. Okay, so it all comes, Hakuna, it all comes down to the numbers. Okay, what am I buying it for? What am I selling it for? How much am I making on it? Okay, if it's better to do an in the money one, that's what I'll do. If it's better to do one out of the money, and then it all depends also on where the stock is moving, because we know it's in a downward trend. Now, what's good about a downward trend is eventually it will find a bottom, and there's no better place to buy a stock than at the bottom, because when it's at the bottom, it's only got one way to go, up, because there can only be one bottom of the year. There can only be one bottom of the 90-day period, and there can only be one bottom of the 30-day period. Here it is at the moment. This is the bottom of the 30-day period. Okay, 30-day high, 30-day bottom. She bounced up. Now she's channeling sideways for a little bit, trying to figure out which way do I want to go now. I don't like it when it's in this situation. Okay, this happens once in a while, and it's like, okay, I'll pass, because I don't like to risk any of my money. Right now, I'm at that point where I live off my interest, so I'm looking for a safe, predictable, consistent 1% per week. Patricia Downing, how are you, honey? You really should call me. You really haven't talked to you in a while, honey. Anyway, so, will you always get the highest pay in the money? So why not always do in the money? Okay, your residents, it all depends on the numbers. Okay, now I will take safety over income. Okay, so if I'm going to get 1% higher up in the money and it's safer bet, yeah, that's what I'm going to go for. I mean, granted, it's nice to get 2 or 3% per week, but that's not the goal. The goal is safe, predictable, and consistent. Okay, you're not going to consistently get 2 or 3%, but I will consistently get 1% or a 0.5%. Okay, then we're looking at numbers between 29% per year and 50% per year, which I don't know anybody getting that other than, people here in the group. Kohl's has a gap to fill. Gallant, I think Kohl's We looked at it yesterday, so I'll write it down so we can take a look at it again today. I doubt we'll get to it today because we have so many that we have to take a look at. Okay, so hopefully this answers all your questions. Okay, Hakuna, it really all depends on the money, on the numbers, and then I would go over safety, over a higher percentage of return. Neil, I cannot find the screen with what you are in the money. I'm looking at Thinkorswim. Neil, I don't recognize the name, so you're relatively new here. I don't know exactly what you're talking about. I mean, do you have Thinkorswim on your own computer? You're not finding it, or are you not seeing it on this which screen? I'm not 100% sure. How can in the money be safer than at the money? Ooh, good question. Actually, that is a really good question. How can it be safer? At the money at this moment in time is 147. That's at the money. It's the closest strike price to the actual stock price. The stock price is 146.88. The closest strike price would be at the money, 147. Okay? How can it be safer? Well, the stock has to go up from the purchase price to hit the strike price. Okay, the 146, which is in the money, it's already in the money, 88 cents, which means if the stock goes up, I make money. If the stock stays the exact same, doesn't move at all, I make money. If the stock goes down, it can even go down a little bit, and I still make money. Now let's look at the other way. The 147. Yeah, you're going to collect this premium right away, but if the stock goes up, and it has to go up 12 cents or more, then you're in the money. Then you make your money. Then you're back into cash. If a stock doesn't move at all, then you have to do it all over again the next following week, and you kind of defeat the purpose because you want to be in and out in 5 days. You don't want to carry and carry and carry. Now, if it goes down, same thing. Okay, so when you're doing at the money, okay, the stock stock has to move when it's a little bit below. Okay, but when it's in the money, the stock doesn't have to move at all. That's why it's a safer bet. Just to clarify, I missed a couple questions. Not finding it. I have it on my laptop. In the money means it doesn't have to move. Exactly right, Gallant. Yo, hey, good evening, fellas. Might as well. Okay, yeah. So your residence, the stock doesn't have to do anything. In the money, it doesn't have to do anything. You stay exactly where it is, not do a darn thing, and still be back into cash following Monday. And that's the main idea. The main idea is to keep the money rolling, keep the money working. You don't want to let it sit in a stock because you don't know what a stock is going to do. I like predictability and consistency. I like to stack the odds and probabilities in my favor. So what are those? Well, number one, it's a dividend king. 50 years of increased dividends. Number two, they got a dividend coming up in the next 2 or 3 weeks, and they have a tendency to go up before the dividend date. Okay, so I get those 3 things in my favor. What else do I have in my favor? The 30-day high was here, the 30-day bottom is here. Now it's going to the upside. Well, where else is it going to go? It's either going to make a new 30-day low, which doesn't look like it so far. All right, so let's get some more of these questions. Not finding it. I have it on my laptop. All right, Neil, I can't help you with your computer at the moment. It can even go down. Yep, Gallant. I like staying in the positive side. But you're right, it can go down. Okay, Colorado. Just to clarify, you are buying weeklies 2 weeks before earnings, hoping to get called out. Colorado, kind of yes, kind of no. Number one, I don't buy options but your sentence, your statement, kind of infers that I'm buying weeklies, which is weekly options, not stock. Okay, the stock is different than the option. Okay, so I buy the stock, I sell the option, totally different story. Now, before earnings, I have a tendency not to take earnings seriously because I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. Earnings are not 100% clear. They're not. There's a lot of iffies about earnings. Okay? Now, however, dividends, stocks have a tendency to go up just before the dividend. So if it's going to go up just before the dividend, they got the dividend coming up, it's bouncing off a 30-day bottom, and everything looks good, and I'm getting over 1%, and I'm in the money, and the stock doesn't have to do anything, it just stay exactly where it is, go up, make money, stay exactly where it is, and even come down a little bit. Yeah, I like all those odds in my favor. Okay? So yeah, Mike, yeah, I don't really pay much attention to earnings reports. Okay, so safest in this case is to lose the share and have a good premium. Well, yeah. Okay, so let's go to the calendar for a second. Let's take BBY. Okay, we're going to take BBY just as an example. All right, now, BBY has a dividend this month for 94 cents. Okay, it's not a huge dividend. Now, we like dividends because we like, now, when I say we, I mean people in my situation. You know, I don't like risk. I'm not looking for capital appreciation. I'm looking for safe, consistent, predictable income. How do I get that? I get that with companies that have proven themselves and have been in business for decades and has consistently increased their dividends for decades. Okay, that's where I want to put my money. I like safety over the possibility of making lots of money. Because if you give me the possibility of capital appreciation or safe, predictable income, I'm going to take safe, predictable income. Okay, I don't want to have to go back to work. Right? So, that being said, fascinating football videos. Yo, how's it going? Kenny, hey all, have you seen stocks of Ecolab? You actually got to give me this ticker symbol because I don't know about Ecolab at all. So as I'm saying, let's get back to the example I'm giving. So why do I want to do this? Okay, here on the 20th, if I want to buy it 2 weeks before, I'll be looking in on the 3rd, right? So if the numbers work, remember what I say? Never buy a stock you don't want to own. Never sell at a loss. Make sure there's 20 years of increased dividends, weekly options, and make sure the numbers work. Okay? So, 20 years of increased dividends, it means next year the dividends are going to be higher. So, if the stock goes down, at least I'm getting higher dividends. Now, if I buy it here, and I shoot for at the money or in the money, whichever is closest, and it hits my target, then I will sell, and then I'll be back into cash on Monday, and I will look at something else. If it doesn't hit my target, I will collect another premium on this day, okay? And then Friday comes, it either hits my target or it doesn't. If it hits my target, I'm out, back into cash. If it doesn't hit my target, I am back here, and then I do it a 3rd time, collect another premium, okay? Now, I'm also going to collect a dividend. So, it's premium, 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 dividend. That's like quadrupling your returns. Okay, so if you're just buying the stock to collect a dividend, and you do what I'm saying, you know, buy it, sell the options, premium, 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 dividend, okay, and then I get back here. If I hit my target, great. If not, I'm back here, and I keep doing it over and over and over again. Okay, so each and every week, this becomes like a cash cow. Am I buying just the dividend? No, I'm not. Now, I would prefer to collect the premium and then be out. Be out back in the cash and now look at something else. Now, there's always a company paying a dividend. Okay, so out of the 9,526 companies, we know because we checked the other day how many stocks are there available. 9,526. All of those, there's only about less than 300 that make my list. So you take those 300 stocks, and assuming they all pay quarterly, 4 times a year, January, February, March, 1st quarter, April, May, June, 2nd quarter, July, August, September, 3rd quarter, October, November, December, 4th quarter. Okay? There's only 4 quarters. So that each and every stock is going to pay 4 times a year. But there's 13 weeks in a quarter. So you have 300 companies roughly, paying out a dividend within a 66 trading day time frame, because each quarter has an average of 66 trading days, only 13 weeks. So now we're looking at 300 companies within a 13-week period. 13 weeks in a quarter. First quarter, 1 through 13. Second quarter, 1 through 13. Third quarter, same thing, over and over and over again. The list never changes. Why? Well, because they're freaking good companies. Okay? I look at the company as if I was going to buy it and never sell it. So I put it onto my little Rolodex or my revolving door or whatever you want to call it. And every 90 days, okay, right here, BBT, the 20th of June. Okay, 90 days, I'll buy it again, or I'll look at it again. 90 days, I'll look at it again. Okay, so you have 66 trading days. So if I buy a stock here and make my 1%, I can buy another stock here, make my 1%, buy another stock here, make my 1%, buy another stock here, make my 1%, and keep going every single week, 13 weeks in a row. That means I'm getting 1% for all the exact same money. So let's say I put 50,000 into AT&T here, get 1%, great. I put 50,000 into General Motors, great, to make my 1%. Put 50,000 into Nordstrom, great. So on and so forth. Nothing but good quality companies, and then I keep rotating the list. So, did you reject the Johnson & Johnson trade because of the math, or the downtrend, or both? It was 100% the math. Sorry. The downtrend, it may have swayed me one way or the other, but if you take a look at the numbers, J&J, if you take a look at the numbers, 146.88, the closest strike price is the 147, it's 82 cents, it's a 0.5%. There are too many other good companies that are offering 1% or more. So as much as I like Johnson & Johnson, and I do, okay, I hardly ever buy them because the numbers just never work out. There's certain stocks, you'll get to know them as you do this, okay? Johnson & Johnson, Coca-Cola, the premiums, and AT&T, the premiums are always horrible, but they're good as a backup. You know, hey, if I can't find anything else, I'll take 0.8 or 0.5%. It's always about the numbers. Where's the best place to put my money at this moment in time? Is it this stock? Is it this one? And I can almost guarantee you that everyone I label, you probably know. Let's do a quick little test, just for the fun of it. Open this up, and we'll take a look at this list right here. Okay, now, you ready? KHC, Kraft Heinz, Kraft macaroni and cheese, okay, what do you call it, crackers, ketchup, Heinz 57 sauce, yeah, Kraft Heinz, big company, dividend king, okay. Bank of America, need I say any more? It's on every street corner in the United States. General Motors, yeah, we all know who they are. Occidental Petroleum, that one might toss you for a minute, because it is a major oil and gas company, but it's not as big as Shell, Mobil, or Hess, or British Petroleum, but it is a big one, okay? Hewlett Packard, need I say anything about Hewlett Packard? Boyd Gaming, now that's one you might not know of, Boyd Gaming, but it's there. Coca-Cola, no need to be said about that one. Mondelez, you may or may not heard of them. Paramount, I'm sure you've heard of Paramount. They make movies. They've been doing it for over 100 years. American Express, Globe Life, okay? Now, you probably heard of every single one of those companies. Ask yourself a question. Does any one of those sound like a bad investment? Buffett's Oil Company, yep, that's Occidental Petroleum. Okay, so I like good quality dividend stocks. Every one I named to you is a good quality company. Now, if I buy Heinz this week, get my 1%, great. Next week, what do I have? Oh, Hewlett Packard, wonderful, do that one. Next week, Paramount. Next week, Mondelez. So if I buy it on Monday, sell it on Friday, and I get to get that money back and do it all over again. So I'm using the exact same money over and over and over again. So I'm investing in all these good companies, but one at a time, according to the calendar. Okay? The calendar tells me who's paying a dividend. Great. I want to take a look at it. Not just any company. Okay, I won't take just any company. It has to be a company that continuously increases the dividend. That way I know I'm getting higher and higher return on my money year after year after year. And that's the only reason why I do it. I'm like, that's safe, predictable, consistent, 1% per week. That's all it is. Okay, so Johnson & Johnson is no. DFS is next on the list. DFS. Okay, now you may not know them by the ticker symbol DFS, but you'll definitely know them by their brand name. It's the Discover card. DSF. Alright, I'm sorry, DF. I spelled it wrong. DFS. I spelled it wrong. My bad. Para pays a dividend. I'm swinging that till they sell. Alright, Mikey. That's a good idea. Alright, so Discover. Let's take a look. First thing I want to see is what can I buy it for? 125. What can I sell it for? The 125? Yeah. No. No. Numbers just don't work. Sorry. Actually, that quick. Your DFS is a good company. Discover card. The numbers just don't work, so it's next. Okay, so now I got hundreds of them to choose from. Usually, I only pick up 1 or 2 stocks a week. This week, I only picked up 2 stocks. Okay, so, and it wasn't that difficult to find them. Barry Belay. What about Dell? Ooh, we didn't put Dell on the list. Dell is officially on the list, and we'll take a look at that in a little bit. We might not get to it today because we have a whole bunch that we're still looking at from yesterday. All right. So that being said, next on the list is Cisco. CSCO. 45.81. The closest can be 46, paying 23 cents. That's a 0.5% again. Again, 29% per year. Is that what I really want? I don't know. Now, there's always a possibility, okay, considering tomorrow is Wednesday. Considering tomorrow is Wednesday, why don't we take a look at next week's? Because this week's is not going to be that good because look how much time we have. Okay, 14 June 24th. That's this Friday. We only have 3 days worth of time value. So it might be a good idea to go to next week. Well, let's find out what next week is going to pay. So if I buy it 45.81, I sell the 46 next week, that's only 41 cents. And that's not enough for a week and a half. All right. Also, take a look at the chart. She's in a downtrend. I like downtrend, but take a close look at this. All right. Ready for this? Take a look at where she is now. Here's your 30-day high. Here's your 30-day bottom yesterday. So when it comes to a 30-day bottom, and I think this one might be a bottom for the year. Let's check. Yes. Check it out. Cisco, you know who they are. Okay, for those of you who understand this, listen closely. Okay? Now, it is at the bottom of the year. Yesterday was the bottom of the year. I'm going to have a question for you, okay? I know what a covered call is. I just wonder if you buy it in at money with the hope for the dividend. We'll take it in the money. No. Sorry, I couldn't. No, it's a no. Do you ever consider the probability of in the money or delta? Yes, I do, Bob, and it's always about the numbers. So however the numbers work. There's another question there? Sorry, Kuhn, that's the only question I got for you. I know what a covered call is. I just wonder if you buy it. And yeah, I've already answered that one. About Oracle, we haven't looked at Oracle, and I don't see the Oracle question on the screen. Okay, I'll put Oracle down, ORCL. We'll take care of Oracle just after we do Dell. So let's get back to Cisco. Okay, so here's an important thing, right? Here's the high, here's the bottom. The bottom was actually yesterday. Okay, what do the numbers look like? 45.81. I like that the 46s. The 46s are not paying 1%, so it's going to be a no. But you know what I do like? Take a look at this. The last 30 days. Here is the bottom of the year. So you remember that old expression, buy low, sell high? Well, you cannot get any lower than the low of the year, and that was yesterday. Well, it's a possibility it could be yesterday. The only way to confirm it to be yesterday, in my humble opinion, is it to start going up. Now, I like 2 days to the upside. So today has a higher high and a higher low. Even though it was a down day today, it still has a higher high and a higher low than yesterday. So, yesterday was the bottom at this moment. We will find out tomorrow. Reggie, Paramount. I don't know if that's not on the list. I just add it to the list now, and we'll take a look at Paramount. Most likely tomorrow, because we're not going to have time to do it because it's 10 o'clock now. We got, what, an hour and a half to go, and I got about 40 stocks to go for. All right, so as I was saying, all right, this could be profitable to someone if you like that idea, because you have your 30-day high, your 30-day bottom. This is actually the bottom of the year. So tomorrow, when it opens up, is it going to go up or down? If it goes down, then we didn't quite find the bottom yet. The stocks go down until it finds the bottom. Where's the bottom? Well, it's you and I that dictate where the bottom is. Because as soon as she drops, it's going to get to a point where we, the investors, say, "Whoa, this is too damn cheap. Let me buy some." And then we start buying. But right now, she's dropping. Okay. Yesterday seems to be the current 30-day bottom, or the bottom for the year. Okay, for those of you who really like Cisco, it's an idea. But remember, it's not paying 1%. Alright, so that's a no for me. HIG, what the heck is HIG? I think I remember looking at it once. I don't quite remember who they are. Nope, that's not them. And it's a no. So HIG is a no. NLY. Now this one was always questionable because they don't have consistently increased dividends. They have consistent dividends, but not consistently increasing. There's a big difference. All right, the 1950s. Okay. Well, let's take a look at the numbers. 1950. Take this week's 1950 for this Friday is paying 15 cents, which is about 3/4%. Okay, that's a nice return. Or next week is over 1%, but I have a minor problem with it, and that would be right here. Okay? 4 days to the downside. Now remember, I like a 30-day high, 30-day bottom. She goes up to a point where we, the buyers and sellers, say, "Nah, I'm not interested anymore. Let me take my profits," and then she goes down, which is where we're doing right now. So this is going to continue to go down until it finds its bottom, and more than likely, NLY, even though it's in money, I mean, it is paying over 1%. I'm going to write down for next week. Why next week? Well, here's the thing. Take a look. See where the 30-day bottom is? If it continues to have profit taking, okay, we have 3 more days. Wednesday, Thursday, Friday. So Wednesday, Thursday, Friday. Then we're down here, getting ready to find the bottom, turn around and go back up, because that's what stocks do. They go down to a point, and then we jump in and say, hey, I want to buy some of this. Then the stocks go back up. That's what we're looking for here. Waiting to find a bottom, turn around, go back to the upside. So I'm writing this one down for next week. NLY. Alright, so that was NLY. JP Morgan is next. Okay, so if you're thinking, alright, I'm saying no only because she goes up, down, I'm waiting for it to turn to go back up to the upside before I think about buying it. And if I think about buying it, I want to make sure the numbers work. Pretty simple, right? DG, 126, 3 days out, 1%, if I math right. Oh, Bob, let's take a quick look at DG, because people have been asking about DG for a while. 127, 143, nice, it is over 1%. Ooh, I want to take a look at that. But let's take a look at the number first. Now, get my calculator. The 127 is going for 143, and if I'm paying 127, then I'm collecting 1.12%. Okay, 1.12 is not bad. You multiply that by 52, and it's 58% a year. I don't know about you guys, but 58% a year works for me. Gallant, you're right. This week and next week work. But before we jump to any conclusions, let's take a look at the seasonality. See what this thing normally does. Now, this is another reason why I like Thinkorswim, because it has this. Ooh, you cannot mistake that for anything else, ladies and gentlemen. Seriously. The blue line represents the movement so far this year. The red line, that is 10 years worth of data. Okay? 2014, 2015, 2016, 2017, so on and so forth. Look at where it is right now. We're in the middle of June. Look at the red line. She definitely goes to the upside. That is a definite to the upside. That is Dollar General. Nice. So this week and next week works. Alright, so I'm going to circle this bad boy for next week. Because I'm out of money this week, okay, all my money's invested in other things. Yep. Okay, so I like Dollar General. Everything's looking good. Okay, so let's take a closer look. Now, how do I view the option screen you have up now on Thinkorswim? Alright, Scott, is easier for me to show you. Bob, you're welcome. It's easier for me to show you live, so if you know, want to figure that out somehow, you know, because me showing you how to do it, it's really not that difficult. If you come over to on the right, you'll notice it's divided by this line here, this vertical line. Now you can take that vertical line, you can move it any way you want. Okay, it does move back and forth. But on the right side of the vertical line, the very top, you're going to see monitor, trade, analyze, scan, market watch, charts, blah, 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 all that kind of nice, neat, fun stuff. So if you're on the trade, the first thing you want to do is put the stock symbol in here. Right underneath that is going to be the numbers. What was the high, the low, the bid, the ask, the last, the volume, all that. I gotta prove who I am. Why do I gotta do this all the time? There we go. Alright, hold tight. So, underneath that, you'll have the trade grid underneath that, which I never use. Okay? And then I'll have the option chain. Click on the option chain and that will pop up. Okay, I know, okay, Cocoon, still no questions over there. Alright, so anyway, that's how you check for the option chain. Okay, and usually almost every trading platform has an option chain, but you got to qualify for it and you have to apply for it. Now, if you call the broker and say, hey, I want to do covered calls, it's the safest and easiest trading strategy. That is why I chose it for my 9-year-old daughter back in 2008. All right, next, let's move on. LUV, which is Southwest Airlines. We looked at this one last night, but people keep wanting to take a look at it. It is on my list. I have bought it several times. The numbers just work lovely. Okay. 28.15. The 28 to go for 43. Nice premium, but it was a no. Why? Remember we had this conversation yesterday. If look at that big jump up. Yesterday was the high of the year. It's never seen this high before this year. So she jumped up huge. And what did I say yesterday? With a jump like that, you're going to have profit taking. Exactly what happened. The chart doesn't work for LUV. Well, the chart's working for me, dude. Okay, look. 30 days ago, here's where we were. The 30-day bottom here. Okay. Thursday was a nice, was the high of the 30-day period. Friday she gapped down, and then Monday she shoots way up with a threat of with a buyout. Okay, so what happened after we saw this big huge gap on Monday? Remember we talked about this last night. that thing most likely is going to have profit taken today, and it did. All right, so that's LUV. That one's out of the question because it's just a little too unstable at the moment. It is what it is. MDT, Medtronics, MDT, 83.11. Well, no, that's good. Let me tell you why. Last trade, 81.95. The bid, 82.26. The ask, 83.11. The market maker's trying to push it up. Well, I can see why. Now, we don't know if the market maker pushing it up from where it is. Look, here's your 30-day high, 30-day bottom. She goes up, pulls back. The market maker is trying to push it up to 83.11 tomorrow. 83.11 is back up here. Okay, but we don't know until the morning. So might want to keep an eye on that because she's bouncing off the 30-day top, so she should be hypothetically continuing up, but the market maker is pulling it back. Why? Because profit here is saying, you need to take your profit, I'm going to take it away from you. No, I am saying it's not a good time to buy. Okay, I get that. What stock is this? MDT, Medtronics. Medtronics, MDT. I posted it on TikTok chat, but you have to scroll up since it's not visible. Sorry, Kuhn, I'm not seeing it. Alright, what are we looking at? Next on the list is ABT, Abbott Labs. ABT, Abbott Labs. Well, here we go. Abbott Labs. I like Abbott Labs. They're on my list, just in case you're wondering. Okay. 105.86. Well, the closest strike price is going to be 106. The 106 this week, 91. Okay, that's what, 0.8%, 0.85? Not bad. Next week's 150. I like next week's better. Okay, give me a little bit more time for the stock to move. Well, let's check the chart and see what it said. First thing I want to take a look at on the chart, high, low, or was it, where is it? Wasn't that quick? High of the year, low of the year. Where was it a year ago? Where is it now? High, low, where was it? Where is it? Simple. Okay, so let's take a look at those numbers and see exactly what they were. Okay, a year ago, 101.63. Bottomed out in mid-October, 89.67. Topped out at 121.71 in the second week of March. Okay, so from there, check that out. She drops all the way down to the bottom, comes up, makes its top, pulls back. Yep, it's time to wait on this one too. Last 30 days, right there. Okay, see what it looks like last 30 days? The previous 30-day high, the 30-day bottom. She shoots up, keeps on going. A new 30-day high, what do you think's going to happen? Exactly. If you don't take your profits, the market maker's going to take it away from you. It's not a profit until you take it. It's actually that simple. Ellen, sir, could you make an analysis for MLGO? BMY. Alright, I want to go back to this one. MLGO. MLGO. I never heard it before. Micro Algo. Yeah, no. That was quick, wasn't it? Why am I saying no to that? Well, number one, it has no options. Number two, it can't possibly have 20 years of increased dividends. BMY, you say, young sir. Bristol Myers Squibb. BMY. Ooh, nice, nice. Ooh, nice. Nice, nice. Ooh, ooh. Oh, oh, oh. Nice, nice, nice. Ooh, remember this one? Oh, oh, oh. Mr. Carter, Mr. Carter. I don't know. I don't know if anybody will remember that one. A few people remember that one. Okay, so Bristol Myers Squibb. BMY is not at work schedule this week. Yep, Alien, I don't know. Gallant, NLGO's a no-go. Yeah, I got that one. RKLB, all right, user 25770. Yeah, it's going to be a no. Okay, I know that one right off the top of my head. All right, so Bristol Myers Squibb. First thing I want to see. What am I going to buy it for? 43. Great. What's the 43 going for? 49. That's over 1%. Next week's 43 is going for 79. That's over 1.5%. Okay, so I would prefer to go for this week's first, and then go for next week's. Next week. If I make it this week, all right. So if I buy it at 43, and I sell it at 43 this Friday, right? I'm going to collect 49 cents a share. That's over 1%, and that's my goal, 1% or more per week. Bristol Myers Squibb. If you haven't heard of them, that company should be in your repertoire. Rolodex, your revolving door. I don't know which one to call it, but it should be on your calendar. It's a good company. It's been around for a very long time. Now let's take a look at the numbers. Now you might think, wait, it's going down. Well, that's what you want it to do, because you cannot buy low and sell high if it doesn't go down. Once it goes down, great. It went down and found the bottom. Now it's going up. Great. It's a great time to get it. Okay, I don't like trying to pick the bottoms, because there's a very good chance I could be wrong. Okay? I like it to find its bottom on its own, turn around, go back up. I have no problem getting in second or third. Really. I don't have to pick the bottoms. Let someone else pick the bottom. Okay? Let's take a look at the numbers. Now, you can't get any lower than the low of the year. Now, we missed the low of the year because it was, I think it was last week or the week before. But we can take the ride from here to the upside, because you can't get any lower than the low of the year. BMY looks good, just like DG. You're absolutely right, Gallant. It does, it does, it does. So, let's continue to take a look at Bristol Myers Squibb. A year ago, we're at the triple top, 66.44. Okay, the bottom, 39.80. Okay, the last 30 days. Now, I like the last 30 days only because I want to find out what she's done in the last 30 days. That's just the last 3 months. Okay, what do we, the buyers and sellers, think of this company, Bristol Myers Squibb, over the last 3 months? Well, you can clearly see she goes down, finds the bottom, and then goes up. Great, that's what I'm looking for. I want to buy it low, and I want to sell it high. You can't get any lower than the low of the year. Okay, now once she finds the low of the year, which pretty much 2 weeks ago, then she goes up. Can talk about Apple, please. AAPL, where is it? I thought it's on the list somewhere. Yeah, it's on the list already. Okay, Apple is on the list. Okay, remember, this is what my list looks like on a weekly basis. I think I'm right about here, going down. Alright, so I got a little ways to go before I get to Apple, but I will get to Apple. It may not be tonight, but no, I can only go by what you guys give me in order, because then it's fair to everyone. Okay, so next on the list. So yeah, Bristol Myers Squibb, 30-day high. I'm sorry, 90 day high, 90-day low. Where was it 90 days ago? Where is it now? Well, 90 days ago was the high of the 90-day period. Okay, that was is that right? 55.04. The bottom, 39.91. Okay, so let's take a look at the last 30 days. Because the last 30 days give me a better idea of which direction it is going. And that's what I'm concerned about. Where is it going in the next 3 to 5 days, or the next week or so? Because I want to jump in and then I want to get out. I want to make that 1% every single week. So I got to make sure I'm very strategic about it. First question I ask myself, do I know who Bristol Myers Squibb is? Do I want to own them? Okay, if I'm going to buy them, does Oracle pay good dividends? All right, Hakuna, we're going to get to Oracle. It's going to take a while because it's thirds of the bottom, dude. Sorry, it's going to take me a while to get to Oracle. But, what was I saying? I forgot what I was saying. Oh, question number one. Always question number one. It's a very important question. Never buy something you do not want to own. Okay? I like Bristol Myers Squibb. I have no problem buying it, owning it, and holding it. That's the way I go into every trade, as if I was going to buy it and hold on to it forever. I don't want to. The longest I've ever held anything was Kimberly Clark, and I held that for 9 months. That's it. Most people buy a stock and hold it for years. 1 year, 2 years, 5 years, 10 years, decades. Increased 9% in the aftermarket. Okay, Hakuna, we're going to get there. Okay, so that's what I'm looking for. Okay, the last 30 days. Here's the high, here's the low. She comes up, a little bit of retraces, and she continues her upward trend. Okay, so she's going upwards now. She found the bottom. The bottom is there. You can't get any lower than the low of the year, and there it is. So ask yourself, do I like Bristol Myers Squibb? Do I mind owning it? And look at the numbers. This week, they are giving me over 1%, and I only have to hold it for 3 days. Wednesday, Thursday, Friday. Okay, buy it first thing in the morning, 43. Sell somebody the rights to buy it from me at 43, and then I collect over 1%. Does the stock have to move? No, it can stay exactly where it is. If it goes up, great. If it stays exactly where it is, great. If it goes down, well, then I'll carry it into next week. That's why I asked the question. Do I like it? Do I want to own it? Preferably don't want to own it for a long period of time. I don't mind owning it for a week. Okay? It's kind of like hitchhiking. Give me a ride to 1%. I'll get out of the car nicely. I'll be on my merry way. All right, next on the list. Oh, got a question. Joe! Okay, Joe. Next on the list is my favorite stock of the year. You wish you had some cash this week from Bristol Myers Squibb and DG, yeah. But next week works. You know, we're setting up for next week. BMY. I like BMY for next week. BMY. We'll take a look at it over the weekend. Okay. Next on the list, my absolute favorite. Anybody can guess my absolute favorite for this year so far? Nobody? Nobody knows? Oh, nobody even wants to take a guess. Everybody's quiet. Alright, I'll let you know. Kohl's? Nope. Macy's, there you go. Macy's, Florida Gal, how are you? I haven't heard from you in a while. You need to say hi more often. That way I know you're paying attention. Oh, and by the way, Florida Gal, I'm in Florida. So I'm going to take you out. You can buy me some lunch. Jim, you're right. Florida Gal, how you doing? All right, so Macy's, you're right. Macy's has been very nice to me this year. All right, so let's take a gander at it. First thing I want to look at, what can I buy it for? $18.80. Okay, the closest strike price is going to be the 19. The 19 is going for 18 cents. You might be able to squeak by that 1% by doing a limit order. Tell the market maker, yeah, I'll do it, but I want 19 cents. That's a 1%. Next week, just a smidge below 2%. I love Macy's. Macy's always been very nice to me. All right, so that being said, let's take a look at what does the chart tell me. Well, what do I want to look at? I want to look at the high of the year, the low of the year, where was it a year ago, and where is it now? Simple. High, low, was, is. Okay, 2 or 3 seconds. High, low, was, is. Macy's has been very predictable for us. Okay, so you know what? Just for the fun of it, for the newcomers who haven't seen this yet. Okay, for the newcomers who have not seen this yet. All right, so this is my website, and these are all my trades that I have done so far this year. So on the right, on the left side, that's an all cash account, which means all cash, right? On the right side is what's called a margin account. That means half of the money is cash, the other half is borrowed money. I do suggest, Julie C., do you not count the positive increase in the strike price when you calculate premiums? It's all about the numbers, Julie. Okay. If you need me to go over one, I will. but always comes down to the numbers. Macy's low looks really low. All right, Wade, we're going to get to that in a second, but I just want to point this out to the new people, for those who never been here before. Okay, cash account, margin account. I don't suggest you do a margin account only because it has a lot more risk to it. Okay, I share 2. I have 6 accounts, but I only share 2 publicly. Never mind, the chart was still on BMY. All right, so let's take a quick gander. Shows you how much I like Macy's. You ready? Week number 1, Macy's. Week 2, Macy's. Week 3, Macy's. Week 4, Macy's. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, I don't have Macy's. I sold it. Okay, I get premium sold. Premium. Ugh. It gives me a nice return every single week. Okay, so week 9's a no. Oh, look at this, week 10, Macy's. Okay, that was a quick in and out. Did you see that? Week 10. Check it out, week 10. 2,000 shares at 1937, so the 1950s got 86 cents. Do you know what 86 cents is on a $19 stock? Hold the phone. 86 cents divided by 1937, 19.37, becomes a grand total of 4.4% on Macy's just that 1 week. But not only that, look, I bought it for 1937, I sold it for 1950, so I've got an extra 13 cents a share that's not in this calculation. So I've gotten over 5% on Macy's for that 1 week. I like Macy's. Okay, that's week 10. Week 11, I sold it. Okay, that's why I didn't have Macy's week 11. Week 12, didn't have Macy's. Week 13, no Macy's. Week 14, got Macy's again. Week 15, Macy's again. Week 16, Macy's again. Do you get to see what I'm saying? Macy's has been very nice to me this year. Okay, so let's go back to where we were and go on to the next set, which is the numbers. Okay, last year Macy's at $15.92. The bottom was right around $10.59, and that was between September and October. It challenged the bottom like 5 or 6 times, so it wouldn't drop any lower. Gallant MCY is at 30-day low, still trying to find a bottom. Now, what's MCY? For Macy's, would you count the difference between the BW 1879 and the 19 strike percentage premium? Ignore you. Hey, Gallant, I have no problem doing that whatsoever. Do we ever pay attention? No, just kidding. I do appreciate your participation. Okay, so our top was the middle of March, and that was 22.12. Okay, the last 90 days. Okay, so check it out. Last 90 days. Here we are. Top, drop, up, bottom. Look where it is now. It's down here. Where do you think she's going to go? Back up, because that's what it does. It goes down, it goes up, down, up, down, up, down, up, down. She's coming up now. Is that guaranteed? No, it's not guaranteed, but that's what it logically tells you. Okay, so last 30 days. Okay, look at the last 30 days. Okay, the previous 30-day bottom, 30-day top. She comes down, here's the bottom. Now she got 3 days to the upside. Okay, it's basically telling me this is the 30-day bottom. Perfect time to jump in. I did jump into Macy's this week. It is similar to Bristol Myers Squibb, like I originally said. You're absolutely right, Don. All right, so I like, well, it's obvious I like Macy's, you know. So, that being said, what is next on the list? ASO. Here we go. Academy Sports. Never heard of them. But somebody wanted me to take a look, so let's take a gander. It's going to be a no. I'm not going to bother looking at the numbers. Why? Take a look at this. Here's your 30-day high. It's a previous 30-day bottom. Remember, I was just talking about this a second ago. 30-day bottom, 30-day top. She's dropping, and low of the year, Macy's. Macy's made a 4% on my portfolio since doing this strategy. All right, Wade, cool beans. All right, so take a look at this one. ASO, high, low, and keep going down. Now this gapped down this morning, but it refilled. But look how low she came today. This is a good indication to keep an eye on this one, because as soon as she finds the bottom, okay, 2 days to the upside, jump in. I'm gonna write this one down for next week, because I got a sneaky suspicion with a big drop like this, and that, look at the size of the volume behind it. The blue line in the back, that represents the volume. Okay, look at the, you know what? Let's change screens, because I'll show you better on a different screen. Okay, I'll show you better on a different screen. All right. Friday dividend date 2 for Macy's. Cool beans. Gallant, I'm not 100% sure. Someone asked me to take a look at ASO, so we're just taking a look at it. Okay, I don't know what it is, and it's actually a no at the moment because of where it is. But what I'm trying to point out at this moment, take a look at the volume. Okay, she's down. She's at a bottom at the moment. She's at a 30-day bottom at this moment in time. Where's she going next? Don't really know. But let's take a look at the volume. There's these blue lines down here. They represent the volume. Okay, so the average volume for this company is right around 1 million a day. Okay, see those numbers? Right around 1 million a day. Okay, so what does that mean? Well, it means the market maker gets, let's find out. All right, the difference between the bid and the ask is what the market maker makes. Now, 50.52 over 51.20, that's a big spread. With a stock that usually does 2 million shares a day, or 1 million shares a day, it's usually a 2 or 3 cent spread. So, with 1 million shares traded, that multiplied by 3 cents per share, that's what, $300,000 you made today, usually. Okay, for 1 million shares, okay, clear. 1 million shares, 1, 2, 3, 4, 5, 6. Okay, 2 comma club. 1 million multiplied 3 cents, because that's what it be on this type of stock. That's what he'll make, about 2 to 3 cents. At 3 cents, he'll make about $30,000. Okay, so what happened today? Today, 6.2 million. So what does that mean? It usually trades at 1 million. Now, today she traded at 6 million. Okay, so the market maker just went from 30,000, okay, to 6 times that. Because she normally trades at 1 million shares a day. Today she's trading at 6 million. That's 6 times. So she made, what, 180,000 today? Pretty sure ASO has 2 years of dividend growth. All right, Gallant, let's take a gander at that, see if he's right. ASO, there we go. Okay, historical data. Now we want to look at dividends only. How many years have they paid dividends? Maximum, yeah, 2 years. So we're going to say a big fat no to ASO. But thanks for pointing that out, Gallant. MPC.
Yeah. I had almost stepped on it and I was going to go down and I didn't want to go down. Oreos?
MPC.
Got some milk?
First thing I want to see with MPC is, what am I buying it at? If I'm buying it at 186.27, where am I selling it at? Well, most likely 186, because that's the closest. But it doesn't have a 186. And this is not going to work. Do you know why this is not going to work? Because the market maker is doing one of these doohickeys. You ready? Last trade 174.46. The bid 170, the ask 186. That's a $16 spread. There's no way we can figure out the numbers with a $16 spread. Okay, if we go at the money, the 174, the 175, go for 171, that's just about 1%. Okay, at the money, which is what the last trade was. Now, when the market opens in the morning, we're going to have to recalculate everything because all these numbers are going to change. They change every 5 or 10 seconds while the market is open. Okay, so you're taking a dart and you're throwing it at a moving dartboard while you're blindfolded. That's basically kind of like what it is. It's up, it's down, it's up, it's down, it's up, it's down. Okay, so you pick a number, hit the send button, and hope for the best. Okay, that being said, let's take a look at the chart. First thing I see, high, low, where was it, where is it? Simple, high, low, where was it, where is it? Alright, so, a year ago today, we're at 110, and that's the bottom of the year, a year ago. Topped out at 121.35, and that was the beginning of April. From there, she just descends, finds the 30-day bottom right here, and just kind of channels sideways. I hate saying channel sideways because they don't go sideways, they go up, they go down. It just so happens this thing's going nowhere. So I could say, yeah, it's going nowhere. So I don't like it when there's no pattern. I can't tell which way it's going to go. So the last 30 days, okay, your high, your low, where was it? Where is it? It's in a downward trend. Alright, so no for MPC. Ooh, we all like this one. Kohl's. KSS, there it is, Kohl's. There you have it. You asked for it, you got it. Okay, first thing I want to look at, as always, what am I buying it for? What am I selling it for? 23, 23, 12, don't like that one. 23, 22, don't like that one either. Sorry, Kohl's doesn't work this time. Look, here's your 30-day high, 30-day bottom. She was up, now she's just channeling sideways. I don't like it, and today was a down day. So Kohl's doesn't make it for this week. Simple, easy. Albemarle, ALB. Now, for those of you guys who do not know, Albemarle is the only stock I lost money on this year. Okay, nobody wins them all. Okay, and if you're thinking you are, you're in for a sad awakening. Okay, you cannot dance to the music without paying the fiddler. Eventually, that's just the way it is. Okay, first thing I want to see, the numbers 114.71. The closest strike price is 115. The 115 is going for 129. I like that for 3 days. That's over 1%, and that's what we're looking for. That's only part of the picture. What is the chart telling me? High, low. Where was it? Where is it? Okay, which direction is it going? Yep, it's going to be a no. Look at this last 30 days. Okay, I'm going to skip all that crap and just go right to it. See? 30-day high. Today's a 30-day low. I'm putting this on the list to take a look at for next week because we're looking for the bottom. That could come tomorrow or the next day. I need another update. No, dude, it needs two. Take a close look. Today is the bottom of the 30-day period. Okay, wait a second. Hold that phone. Hold that thought. Yeah. Okay, it's only the bottom for the 30-day period. The bottom for the year is right around 107 and a quarter. Okay. So we're going to put ALB on the list to take a look at for next week because I want to find its bottom, and then I want to see what the numbers look like. Because ALB usually has good numbers, and you can't get any lower than the low of the year. It's getting close to the low of the year. All right, so let's continue. Next on the list, the most shorted stock in the stock market. Who knows what that is? Anybody? J.P. Morgan? Nope, that's not it, Ruben. But we'll take a look at J.P. Morgan. Kohl's? No. We already looked at Kohl's. Tesla? No. Who can get it first? Who gets it first? Target? No. No, nobody got it yet. Walgreens. WBA. Drop my pen. Alright. First thing I want to see with Walgreens.
Okay, so
I thought it was Kohl's. Nope. The most shorted stock apparently is Randall Ray, JFBR. Never heard of him, Randall. JFBR. We'll take a gander at it most likely tomorrow because we're running out of time tonight. Okay? We got 45 minutes left and I got about 20 stocks to look at. It is the most shorted stock. Alright. So let's take a look at the numbers. I can get it 15.97. The closest strike price to 15.97 would be the 16. The 16 is going for 19 cents, well over 1% for this week, well over 2% for next week. So it's 1% this week, 1% next week. All looks good to me. All right, but let's take a look at the chart. The high, here's the low, is where it was, and this is where it is. Look at here's the bottom of the year right there. You cannot get any lower than the bottom of the year. Walgreens made it a couple of weeks ago. So where's it going to go next? Well, if it was going to go lower, it probably would have. A year ago was the high at 32.93, bottomed out the end of May at 14.70. Where are you getting the short percentage data, James? Oh, I got it from a few people in the audience. Okay, so it wasn't me, because you guys think I sit there and look at the computer all day. I don't. When I say 10 minutes a day, I mean 10 minutes a day, seriously. Alright, JBF, Jeff's brand, LTD, short float. Okay, Randall Ray, hold on, let's just throw that one out there. JFBR, I never heard of him, JFBR, Jeff's brand. Yeah, that's no, dude. Okay, it's not even $1, and it has no options. There's no possible way that could have 20 years of increased dividends. Don't waste time. Yeah, thanks, Randall. Kind of late. Right, back to WBA. Okay, so WBA, like I said, 15.97 to 16, going for over 1% for this week. Next week is going over 2%. High, low. Where was it? Where is it? Let's take a look at the numbers because they look lovely. Okay, a year ago, 33.01. A couple of weeks ago, 14.62. Okay. Last 90 days. Check it out. Last 90 days. To the bottom. Now the bottom's here. Now she's going to the upside. Well, where else is it going to go? You get the bottom of the year. Where else? All right. 3 months ago, 21.16. She topped out at 22.07, and that was the end of March. We have interest rates tomorrow. Okay, Adrian. Not quite sure what that has to do with Walgreens. Okay, bottomed out, like I said, on the end of May at 14.62, the last 30 days. Right there, last 30 days. Okay, 30-day high, almost 4 weeks ago. 30-day bottom 2 weeks ago. Okay, and she's coming up. Now she's channeling to the left, or to the right. Yep, I know the earnings are in 2 weeks, but I've seen negative earnings where the stocks go up, and I've seen positive earnings where the stocks go down. So earnings really don't mean a whole heck of a lot to me, because nothing really changes in the company other than the fact that regardless of whether the earnings are good or bad, it's up to the market maker to decide which direction it goes. So if you get a good report, maybe the market maker will push it up. Okay, but maybe He didn't get any hugs and kisses from his wife in the morning, and he's in a bad mood, so he brings it down. There's no real rhyme or reason to it. Okay? If I see positive earnings, it's going down, going up, it's all over the place. But the only consistency I did find is stocks have a tendency to go up before the dividend. That is consistent. It's got nothing to do with earnings. That being said, let's go on to the next one. Mosaic. M-O-S. Ooh, interesting. What do I mean by interesting? Well, look at this right here. She's coming down to challenge a 30-day bottom. What does that mean? Well, how strong is that 30-day bottom? But we'll get to that chart in a minute. Before I even look at the chart, I want to take a look at the numbers. Because the numbers dictate whether I'm not even going to look at the chart. All right. 28.73. So the 29 is what I'm looking for. 11 cents this week. 28 cents next week. Not that great. And then, yeah, I would want to take a look at it, because look where we are. She comes down, previous 30-day bottom, 30-day top, new 30-day bottom, and today was down also. Okay, I like 2 days to the upside for Mosaic. You're right, Gallant, 30-day bottom. So, even though she's at a 30-day bottom, I'd like to take a look at it, see when she turns around. So we'll write that one down for next week. Alrighty. Next on the list is UPS. Now we all know who UPS is. First thing I want to see, 137.70, so the 138, 98, 138, yep. So next week's 138, so good. Okay, so from there, what do I want to see? Okay, the high, the low, where was it, where is it? Okay, fine. Ooh, look at this. Here's a 30-day bottom, and she's bouncing up. So I like the way the chart looks, and I want to take a little bit more, a little bit closer of a look to it. All right, so let's take a little bit deeper of a look. The seasonality is excellent for UPS. Awesome. Well, let's take a look at that, Gallant. Okay, so a year ago, we're at 171.53. Top out at 193.61, and that was back at the end of July. And the bottom of the year, 133.58, and that was the 30th of May. So what happens when you get a bottom of the year? Well, you've got no other place to go other than up. All right? So, 30-day high, right here, 30-day bottom, 2 days to the upside, channeling to the side. Okay, so where's she going next? Seasonality gives me an idea based on what did it do last year and the year before and the year before. Oh, you cannot mistake that for anything else. Take a look at that, my friends. The blue line represents this year right here, and this red line represents the last 10-year moving average. Okay, so that's 2014, 15, 16, 17, 18, 19, 20, so on and so forth for the last 10 years. That's the average movement. This is where we are right here, right now, the middle of June. So where's it going next? To the upside. How can you miss that? Okay, so let's go back and see the last 30 days again. There you go, last 30 days. 30-day high, 30-day bottom, up, channeling, and the 138s for this week give me 98 cents. That's about 0.75%, 0.75. And next week is going for 168. That's over 1%. So in this situation, next week's is better. Why? Well, because if she's going anywhere, most likely she's going to go to the upside. All right, next on our list, AT&T. AT&T. It's going to be a no. Really quickly look at. Okay, 2 months ago, shoots on up here, and it's only 3 days back. It's going to come down a lot further. So AT&T may be 2 weeks away, so we'll look at it in 2 weeks. STEM, S-T-E-M. STEM, you say? STEM it is. S-T-E-M. Never heard of them. That's why. It's a no. I'm not even going to bother looking. Nucor, N-U-E. Okay, when you guys have me look at stuff, please do me a favor. Make sure it has dividends and weekly options, and the dividends are increasing. You can't get that on a $3 or $4 stock. You just can't. Okay, we're looking at Nucor. Alrighty. First thing I want to see, it's going to be a no. But it's going to be one we want to keep an eye on, depending what the numbers look like. Okay, 155.60. The 155s, I go for 230. I'm losing 60 cents off the top, take 60 cents off that, so I'm walking away with 170. That's still over 1%, and it's 155, which is nicely in the money. Okay, I like it when it's in the money. Okay, so over 1%. What do I look at? What do I want to look at next? That'll be the chart. Well, here's the high, here's the low, here's where it was, here's where it is. Okay, what direction it's going? Well, it's coming to the downside until it finds its bottom. Here's another one. It's not good, it's probably good for next week. What do you think about NEM for this week and next? I'm writing Nucor down for next week. It's already written down for next week, Nucor. Newmont, 40.71. The 41's 45. That's over 1%. The 41's, ooh, nice. Not quite 2% for next week, but over 1% for this week. All right, the chart. High, low. Where was it? Where is it? Where is it moving next? Basically, look at this. Almost channeling sideways. Little drop, little dip. But basically, she's on the same price now as she was a year ago. All right, so let's take a gander at it. A year ago, we opened up at 41.40, topped out at 45.85. That was back in July. Bottomed out 29.38 the end of February. All right. Last 90 days, last 3 months. Okay? There she is here, drops, shoots up, pulls back, shoots up, pulls back. Where's she going next? Unfortunately, we need a 30-day chart. Take a look at that one. But 30 days ago, right there. Okay, that's pretty clear to see. 30 days ago, here we are. Okay, low. Topped out, a new bottom, jumped up, drops down again, jumps up, drops down again. Now she's going to go to the upside, more or less. So that's a good one for this week. NEM, the numbers look right, the chart looks right. Let's take a look at the seasonality. What does it normally do this time of year? Okay, so here we are now. Okay, we're here now. So you can drop a little bit and then go to the upside. Fine. Looks good to me for the next 2 weeks. Okay. Ooh, Starbucks. We haven't looked at Starbucks in a while. Now, I still have Starbucks, but SBUX. Now, I have Starbucks in a different strategy, in a different account. I don't have it in this particular account. Right, but let's take a look at the numbers and let's take a look at the charts. First thing we want to see, 79.99, which I'll be buying, selling the 80s. What's the 80s? 76 this week, $1.29 next week. So better off going for the one next week. The chart, high, low, where was it? Where is it? Okay, great. Let's take a deeper look. A year ago, 98.47. Okay, top of the year, 107.74, and that was in the middle of November of last year. Bottomed out in the beginning of May. But take a look at the last 90 days. Okay, last 90 days, look where we were. 92, she comes down. Look right here, 88, and then she gaps down. I bought it at 88, so I own it at 88. She came down, I dollar cost average, which means I bought more here, so it brought my cost basis up to here. It makes it easier to sell. Okay? But, here's your bottom of the year. We watched this happen. Okay? We were looking at Starbucks here. We dropped, and like a lot of us lost our lunch. Like, oh, what do you mean? From 88, she drops down to 74 or 73. Okay, wait for 2 days to the upside, and I jump in 84. Got my cost basis down. Makes it easier to sell at that point. Okay, so let's take a closer look. 30 days ago, take a look where we are 30 days ago. Right here, 75. Here's our 30-day bottom. Here's our 30-day top. Where do you think it's going now? Sorry, Charlie. It's just the way the chart reads. She goes down, finds a bottom. Up, retrace. Up, retrace. Up, retrace. Up, retrace. And she's going to keep going down until she's had enough of going down and turns around and goes back up. So we're going to put Starbucks on the list for next week. Not next week, but the week after. Because, see, next week, she'd probably be down here somewhere, but the week after, she should be down about here, hypothetically speaking. So we'll take a look at it next week. Now, I'm here every night, so I really don't mind taking a look at it next week. Starbuckies, all right? So maybe in 2 weeks would be perfect. Now, the numbers usually work out for Starbucks. So if I'm going to buy Starbucks and get my 1%, I like Starbucks. Americans like Starbucks. We like our coffee. Okay? Yeah, you can go to the store and get it for, $1.50, $2, but go to Starbucks, pay $6 for a cup of coffee. People still do it. They prefer to pay the $6 for the coffee rather than making it at home, or rather than getting it at the mom and pop grocery store for $1, or even McDonald's for $1. They still prefer to go to Starbucks and pay $6 because they can. That chart doesn't scream up to me. No, Gallant, that's not what I said. Alright? I said, here's your 30-day bottom. Here's your 30-day top. Next week, it should be here. The week after, it should be here. Okay? I said I wrote it down to take a look at it in 2 weeks. Not this week. 2 weeks from today. No, I was agreeing. Oh, yeah, okay. You're agreeing with me. Okay. Alright. The next on the list, SWKS. Is that Stanley Black & Decker? SWK. Whoops. SWKS. Skyworks. Okay. Interesting. Good as saying no, but still interesting. Let's take a look. 96.22. Okay, 96.22 was the last trade. I can buy it for 96.30. Okay, so the 97 is going for 80, not quite there. The 96 is going for $1.30. There you go, right there. The 96 is one strike in the money. Okay, 96.30, $1.30. Take 30 cents off there. I'm still making $1, which is over 1%, and that's what I'm looking for. Can you explain how to read charts? Oh yeah. User, you ready? How to read a chart. Okay. High. Low. Okay. There's your high of the year. Here's your low of the year. This is what it was exactly a year ago. This is where it is today. Each one of these lines represents one trading day. All right? It reads from left to right. Now, let's zoom in a little bit closer. These are called candlesticks. You notice there's a wick at the top and a wick at the bottom. Okay, and then this solid part here. So you have a red day and a green day. Okay, the wick at the top represents the high of the day. The wick at the bottom is the low of the day. Now, on a green day, stock is up, the bottom horizontal line is the opening of the day. The top horizontal line is the close of the day. Okay, so the opening is at 9:30 in the morning. The close is at 4 p.m. in the afternoon. 9:30 to 4. 9:30, 4. The red represents total opposite. The top vertical horizontal line is the opening of the day. The bottom horizontal line is the close of the day, which means it closed at 4 o'clock, lower than it opened at 9:30. That's a down day. That's how you read a chart. All right, so let's go back to the full chart. Okay, so here's the 1 year chart. Here's the high, here's the low, here was it, here it is. Okay, interesting. Now let's take a look what the numbers say. A year ago, she opened up at 104.98, topped out. Now it looks like a triple top. If you take a close look, it looks like it hit 3 times, and it just doesn't go past that number. And that's 115.82. That's your top. And your bottom, 85.19. Way down here. So we know what the top is, we know what the bottom is. And currently, we're neither at the top or the bottom. Okay, so great. Let's take a little better of a look. The last 90 days, which is the last 3 months, last 90 days. Okay, here's where we were. Here's the high, here's the low. That's where it was, this is where it is. But look at what happened. Up, down, right here. Now she's going to the upside. Alright, so let's take a closer look at the last 30 days. 11 years of dividend growth and EX date 520. What are we looking at there, Gallant?
We drive to Orlando, we get the Mustang, we drop it off at your dad, then we drive back here.
Okay, I mean double bottom strength, yep, head and shoulders, etc., blah, 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 yep. What I'm looking for, okay, I'm not looking for patterns, double head and shoulders, pennant, retracing. Yeah, I'm not looking at any of that stuff. Really, I'm not. I'm looking for where's the 30-day high, where's the 30-day bottom, which direction is it going, what is it that we, the buyers and sellers, are telling me. Okay? It's telling me here's the high, here's the low, here's this big huge gap down. Maybe I want to look at that, maybe I don't. But gaps have a tendency to fill. So if we're down here, which is the 90-day bottom, okay, we're channeling to sideways. Eventually, she's going to go up to fill it. Well, I already did fill it. The gap's already been filled. No, wait a minute. No, it hasn't. From here to there. So it still has a ways to go up. Okay, so let's look at the last 30 days. Okay? 30 days ago, here we are at 92. She jumps up to 95.50. Drops down to 89.50. Up, down, up, down, up, down, up. Most likely there's going to be profit taking tomorrow. More than likely. Why? Well, look at the size of the opening and the close on 2 days in a row. Okay, 90 to 93, 93 to 96. That's big jumps. SWK 11, okay, blah, 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 blah. Blah, 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 blah. Okay, so 96.30 to 97 is going for 80. Next week's 97 is going for 190, 145. Okay, what do you think? Let's take a look at seasonality. What does it normally do this time of year? Okay, seasonality, there you go. The blue line represents this year's movement. The red line represents this. And you can't really mess this up. Look at that. So in the next couple of weeks, this baby's going to shoot up based on historical performance. Is it guaranteed? No, it's not guaranteed. It's what it normally does. Okay, what do I mean by normally does? Well, how old is the company? Normally, Pete the plumber comes in and does his job. He comes in at 8 o'clock in the morning and he leaves at 4:30 every day, week after week after week. And then you have Marge, the secretary. She does the exact same thing, day after day after day. It is a consistent, never-ending scenario to make the product that they make, whatever it is they make. Doesn't have 20 years of increased dividends. Well, then why are we? Oh, UNH. Yeah, UNH is a no.
The only reason you be able to drive it.
Okay, so from there, what does it mean when it says covered call buy rights? Is that what you're doing? Yeah, covered call and buy rights, basically the exact same thing. Okay, you're buying a stock, selling somebody else the rights to buy it from you for the same price. Alright, so that is SWKS. Next on the list is Apple. Finally getting to Apple. SWKS doesn't have increased dividends. It's a no. Thanks, Galan. Okay. Apple's next. Apple. Somebody wanted to take a look at Apple. AAPL. Yeah, Apple's a no. Wasn't that quick? Apple's a no. Simple, right to the point. Why is it a no? Right here, take a look at this. Okay, middle of April, today. She went from 195 to 207 just today. Yeah, that's going to be profit taking. If you don't take it, the market maker's going to take it away from you. And look at the volume. The volume is triple as what it normally is. If Macy's was good 2 weeks ago, it should be really good now after falling below 19. Yeah, happy person. I did buy Macy's yesterday. Okay, we looked at it. We've been following it. Jumped in yesterday. Got, I think, 4% yesterday. So let's see where she is. And let's see where she ends up by the end of the week. Okay, that's why we have that daily trading group. We trade every morning from 9 a.m. to I think we're on to like 10:30 or 11 today. Okay, Monday, Tuesday, Wednesday, Thursday. That's when we buy, take a look at our stocks, make sure everything is working right. And then on Friday we jump in at 3 just to make sure the positions we picked up during the week all come to what we wanted to do. Okay, buy on Monday, be out on Friday, collect that 1%. Safe, predictable, consistent 1% per week. Okay, so Apple's going to be a no. The reason it's going to be a no, look at all this movement to the upside. Okay, more than likely, you're standing on a ladder, reaching for the stars. Eventually, it's going to drop down. Gallant, you want to take a look at the gap? GPS. Now, we bought, a bunch of us jumped into the gap a couple weeks ago. But we'll take a look at it. It's on the list. All right, so Apple's a no. Next, JD. JD. 29.47. Take a look at that. 29.47 to 29.50s go for 44, well over 1.5%. The 29.5, well over 2%. All right, so what do we want to look at? Well, we want to look at the chart. Here's the high, here's the low, here's where it was, here's where it is, where's it going next? That's what we want to find out. Okay, a year ago, we opened up at 36.99, topped out the end of July at 41.91. Okay, the bottom was in the end of January at 20.87. The last 90 days, right there. Take a look at the last 90 days. Up, down, up, down, up, down, up, down. Finds the bottom right there. Shoots on up, finds the top, finds the bottom, comes up, down, down. Now she's going to go back to the upside. Very predictable. Up, down, up, down. Just see the way that we, the buyers, we're leaving breadcrumbs. All right? That's last 90 days. 90 days ago, 27. found the bottom in the middle of April, 24.68. Topped out at 35.73, and that was the middle of June. From there, she right there we go. Check that out. 30-day high, 30-day bottom, goes up, pulls back, now going to the upside. I'd like to have one more update before I jumped into JD, but I'm not quite sure JD's on our list. We'll take a gander at it again tomorrow. How would you trade? Well, how would you trade 100,000 with your group, equally across 4 or 5 covered calls, or I plan to join soon? All right, Calibri, that's awesome, but the account that I share right here, okay, account 1, okay, account 1, January, we started out with 117, okay, this was all cash. This account here is a margin account, 100,000 cash, 100,000 margin, which means I have 200,000 to play with. Okay. However, 100,000 is mine, 100,000 belongs to the broker, which I have to pay interest on. Now, if you can't see it very well on your iPhone or your tablet, this screen here behind me is live on YouTube every night. So go to youtube.10minutetrader.com and you should be able to find it. Or better yet, come up here, right up. I gotta move my hand around. Right up here, where my cute little face is. Click on that. That'll take you to my bio. The bio goes to the10minutetrader.com, which is this page behind me on the internet. The10minutetrader.com. You can join our morning trading group right there below the videos. Live trading. Click right there. Whoops. Yep. Live trading right there. Okay. That being said, let's go back and see what JD looks like for the last 30 days. Okay, high, low, up, down, up. Okay, what does it normally do for that? We like to look at the seasonality. Now, if you don't know what seasonality is, well, you do know what it is, you just may not know that you know what it is. Okay? January 1st, December 31st. What usually happens in the year? Winter, spring, summer, fall. Okay? Winter, spring, summer, fall, winter again. They just fall one after another. Stocks react differently to the calendar. Okay? Working at JD in January is different than working at JD in July, which is different than September, which is different than December, which is different than March, which is different than... They're all different. Certain factors are accountable, directly related to the calendar. So that's why we look at the calendar to decide when we jump in. Okay? Occidental Petroleum. Occidental Petroleum, Paramount, Hewlett Packard, Heinz Ketchup. What else we got there? Bank of America, General Motors, Coca-Cola, okay, American Express, Globe Life. Come on, you've heard of all those companies. I only deal with companies that have over 20 years of increased dividends and weekly options. That way I know I'm getting a higher and higher and higher rate of return every single year. All right, that being said, next on the list, I remember someone mentioning this last night, International Paper, IP. International Paper. First thing, yeah, it's going to be a no. Do you see that? Look at where we are. Okay, way down here, 34. Now we're up here at 46. Yeah, there's going to be profit taking pretty soon. Sorry, I didn't even get to look at the numbers. Okay, this one, it's not even worth looking at in the next couple of weeks because it's got a long way to go to the bottom before it turns around again. So yeah, sorry, international paper. It's just to know. Ooh, we're back to Kohl's again. We looked at Kohl's earlier, but somebody wanted to look at it again. Kohl's. Let's look quickly. 23, 23, 12, nope. 23, 22, no. And look where she is. She dropped down, kind of like in the middle of the high and the low. See where it is? 30-day high, 30-day low, right here. No real strong indicator which direction it's going to go. Okay, we don't know if it's going up, we don't know if it's going down, because it's not giving us any indicators. 30-day high, 30-day low, gapped up. This gap will close eventually, but there's no signs of it going to the upside yet. So I'll wait a couple more days to see what it does. That's why we jump in every day. We jump in every day to take a look, to get an idea of where are our favorite stocks going. Is it a good time to jump into Kohl's? Well, it's not a huge indicator. It's not a big red flag. Hey, pick me, pick me, pick me, pick me. No, that's not waving yet. So, Dell. Ooh, Dell. Again, it's 20 past. We have enough time to look at a few more. All right, a few more. Dell is next on the list. Dell. D-E-L-L. $132.25, 132s, ooh, 190s, that's a yes. Next week, even better. Now, let's take a look at the numbers. A high, a low, where was it, where is it? Okay, fine, let's take a closer look. A year ago, 47.90, that's the low of the year. The high was just a few weeks ago, 179.42. Last 90 days, okay, last 90 days, check it out. Way down here at the 90-day bottom, she shoots up, finds the 90-day top, drops. Here's our bottom, 2 days to the upside. That looks good to me, because let's squeeze in, take a look at the last 30 days. Because that's 90 days. That's one thing. That's showing me one picture. But I want to know the next 5 days or the next 4 days. Because tomorrow's Wednesday. Wednesday, Thursday, Friday, I want to be out by Friday. So I want to pick the right stock at the right time. Okay, so the last 30 days, right there, here we go. What is that? Totally different picture. Do you see that? There's the high. Here's the low. Was low here. Now it's a new low here. So where's it going next? Okay, there's your low right there last Friday. Monday was higher and Tuesday was higher. I would like to find out what it's doing tomorrow morning, because if tomorrow morning she opens up a little bit higher than when she closed today, that's a definite buy signal. Because you have your high here, your bottom here, you got a gap here, when gaps have a tendency to fill. So this thing has everything going to the upside. There's a dividend coming up, okay? High, the low, and big gap. Yep, she's going to the upside. That's Dell. I'm gonna write Dell for next week also. Alrighty. So, next on the list, Oracle. Somebody want to take a look at Oracle? Now's the time. Here we are. O-R-C-L, Oracle. Woohoo! 123. Oh, yeah. This one's going to be kind of tough, because the last trade is 123.88. The bid, 135. The ask, 135. Yeah, the market maker's pushing that bad boy up. Okay. A year ago, 115. Bottomed out at 99.26. That was in mid-December. Topped out at 133.20. That was in mid-March. Okay, last 90 days. She drops, pulls back, drops, pulls back, up, down, up, down, up. Where's she coming down next? Down. Okay. Last 30 days. Here you go. See? Even the last 30 days reconfirms the movement. Okay? Low, high, low, high. Now she's coming down. If you want to know an Oracle, that's my opinion. What seasonality told me? Should be telling me just basically the exact same thing. Well, no, it don't. It shows it going sideways in the next couple of weeks. Flat. Not up, not down, just flat. And that's what I like. Flat is I like because it doesn't go up, it doesn't go down, it just kind of stays the same, and it's like perfect for covered calls. And that's all I do. Covered calls are good quality stock. Get a safe, predictable, consistent 1% per week. Okay, that being said, statements. Here we go. Alright, so that's Oracle. Paramount. Didn't we already look at Paramount today? P-A-R-A. Tra-la-la. 1086. It's going to be a no. But wait a second. I want to take a deeper look at that because I got a good close look at the chart. Let's take a look at the number. 1086. So we're looking at the 11. The 11's going for 38. That's 3% for 3 days. Okay, 11. That's over 4% for the 10 days. I would do this week's, get 3%, and see what next week pulls off. But let's take a look at the numbers. Look, first thing I want to see, high, low, where was it? Where is it? Look at what's happening right here. This is like this week right here. This is what I want to take a look at. Okay, so a year ago, 1641, topped out at the beginning of December at 1723. The buyout negotiations were scrapped today. Cool. Well, our bottom was the second week of April. Alright, so we got 2 days to the downside. Let's zoom into that. Okay, 30 days ago, that's where we were. Here's our bottom now. So, if Paramount has anything left to it, here's your 30-day bottom. You cannot get any lower than a 30-day bottom. Hopefully has another deal waiting in the wings. Hey, if they do, they do. If they don't, they don't. You have to ask yourself, do I like Paramount? Do I want to buy it at this current price of at 1088? Because at 1088, you sell off the 11s, and you're getting 3%. What about the 1050s? The 1050s, 36 is paying, wait a second. At 1050, I'm losing 36 cents here. You take 36 cents off of that, then make it 30 cents. That's still 3%. I would go for the 10s or the 1050s. It's further in the money, which means it's a higher probability of being back into cash the following Monday. That's my ideal thing, you know, especially if I'm 2 strikes in the money. Okay, if I do the 10s, I'm walking away with 1091. 1091 is 5 cents. That's not enough. So it's the 1050s. Okay, the 1050s look very nice. All right, I'm gonna write Paramount down for next week. See what happens at. Oh, you did the 1050s at 10. You did the at EOD. I have no idea what EOD means, Secretariat. Okay, you did at 1090. Okay. End of day. Okay. Gotcha. That's a good play. Yeah, but did you sell the call against it? So you got it at 1090, and now it's at 1086. Yeah, gotcha. All right. Next on the list, that was Paramount. So we'll have to see what Paramount opens up at tomorrow. So I'm kind of curious. You sold the 11s. Cool. BMY, Bristol Myers Squibb. This will be the last one of the day. BMY. My eyes are getting a little heavy. BMY. 43. I think we already looked at this. We did. We already looked at Bristol Myers Squibb. Let's do a quick crash course for those who missed it. I can buy it at 43. I can sell the 43s for 49, make over 1%. Great, awesome. What's the chart telling me? The chart's telling me here's the high of the year, here's the low of the year, and it's bouncing off that low. You cannot get any lower than the low of the year. Now, we're finding this with a lot of stocks lately. Okay, we've seen like 5 different stocks are at the low of the year, and they're bouncing off of it. Okay, so here's the high of the year, here's the low of the year, and look at this. This right here. The last couple of weeks, she's bouncing to the upside. So let's take a quick gander at that. Okay, last 30 days. You cannot argue with this. 40, 45, 60. She dropped down to 40. Up, down, up again. She's going to challenge this 30-day high. She's going to the upside. Yeah, I like Bristol Myers Squibb. All right, then. That's enough for today. It's 11:30. Had a wonderful time. I hope you guys learned a lot. See you guys again tomorrow. So, bye to you guys over here at Instagram. Bye, guys. Done. Oops, done. Ooh, I'll have to write that out in there for a second. Facebook. You guys are done and over with. Next is going to be you guys over here on YouTube. Wonderful, wonderful, wonderful YouTube. Bye, guys. Okay, that one's shutting down. And last but not least, you guys here at TikTok, we'll see you again tomorrow night. You guys have a great night. And for those of you guys that are joining us in the morning trading group, go to the Patreon, the Dividend Stock Talk. Brought to you by the 10-Minute Trader. It's not that difficult to find me. Come up to my bio up over here. All my links are on the website. You guys have a great day, and we'll talk to you again tomorrow. Okay, so you guys here that's still hanging around, this is James from Dividend Stock Talk. Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow for a safe, predictable, and consistent 1% per week. You guys have a great night. It is June 11th, 2024. Maverick, you have yourself a wonderful day. Bye.